Right, thank you for that. That was, of course, the word coming in or the data on why some of these margins of FMCG companies could be under pressure. Well, Abneesh Roy, Executive Director, Nuvama Institutional Equities, joins in to help us understand the current situation for FMCG companies. Morning, Abneesh. Thank you very much for joining in. Abneesh, I'm not sure if you heard Sesha's link about how raw material prices have actually skyrocketed. It's not just cocoa, but even the likes of palm oil have sharpened in the last couple of months. What does that mean for FMCG companies? Do you feel the phase of margin expansion for a whole host of FMCG companies is now behind us?
Yeah, thanks and good morning to everyone. Yeah, from a this quarter perspective, Q4, we don't see any major issue of margin pressure because normally the current raw material impacts with a lag. So yes, in FY25, there could be issue more for food companies rather than household and personal care company because most of the inflation which you also highlighted has been more in the food raw material, for example, cocoa, wheat, sugar, etc. But on the other hand, milk, which is also a key raw material, that is slightly down YOY. So you need to take a holistic view and not look at just a few raw material. On the other hand, for household and personal care, the key raw material is generally crude oil or the crude derivatives or the edible oils. Uh, yes, there is some bit of inflation from the lows, but I would say if you compare that with the peaks which we had seen, for example, crude oil used to be almost like $110 or $120 versus that we are still lower. So it will be a bit of a error to just see from the lows. So I'll not be too much worried on the household and personal care companies in terms of the categories. In Q4, I don't see too much of a impact on gross margin. Many of the companies will still see YOY improvement in terms of gross margin. Yes, the extent of gross margins improvement will be a bit lower versus the earlier trajectory, but slight improvement will happen for many companies. Now, coming to cocoa, etc., of course, that's used more in the chocolates. Please note that in chocolates, etc., it is largely two, three players pan India who dominate. It is not too much of a dominance by regional players. So we do expect that price hikes will come back for FMCG sector in general and chocolates and a lot of the food categories in particular. In FY25 for the sector, FMCG sector, we expect 2 to 4% price hike come back, and we don't see too much of an issue there. I agree with your point that yes, the demand side volume growth is a bit soft currently, more in the rural India. Urban volume demand is still reasonably fine. So after FY24, where the price hike for the customer was in fact negative in many of the categories, we don't see an issue of 2 to 4% not getting absorbed. If you see long-term FMCG pricing, there is a 2 to 3% kind of a CAGR in terms of pricing long term. So after 1 year of a cut, absorbing 2 to 4% shouldn't be an issue. So that should help the top line also. So net FY25, we see food companies under slightly higher risk on the margins, but we also need to factor in normal rainfall. So what happens is in raw material, we get too concerned on the current trends and not factoring in the normal. In fact, the monsoon is likely to be higher than current expectation. That could cool down the inflation worries in the second half of FY25. So net trend,
Abneesh,
not too
let's
worried.
just break this down company wise so we have a better understanding of what this will mean for investors in these companies. So stocks like HUL, Marico, Britannia, Pidilite, and some of the paint companies, in my opinion, are the ones that will have to undertake a little bit of a price hike in order to deal with the increase in costs. If that does happen, how constructive are you on these 5 companies they've named, and paint companies as well? We can add to that list because of the increase in crude and palm oil prices.
So I would expect that HUL and Marico and Britannia, etc., the price hikes will come back 2 to 4%. As of now, as I said, in HUL, some bits are of the raw material are in fact down. For example, HUL, tea and the milk raw material will be down, in fact, YOY, while some of the crude related will be slightly inflationary. So I would say that for HUL, not a major concern on the margins bit. It's more on the volume growth where there is a bigger concern for HUL. For companies like Nestle, clearly price hikes will need to be taken, especially in the chocolates portfolio. On the other hand, for their milk business, things are fine. In fact, they should see margin improvement. So that's how I would see that, yes, there will be pockets where in the staples, not too much of a concern for HUL, etc. Coming to paints and Pidilite, I would say that yes, in paints, because Grasim has also come and because generally 4% kind of a price cut has been taken, currently, the price hike will come essentially in the second half of 25, not in the first half. That's how we see. So, Asian Paints, etc., are sitting on the higher margins also. If you see last 3-4 quarters, the margins has been on the higher side. So, in H1, there is a chance that yes, the margins could be under some pressure. We don't see a big pressure for crude-related inputs currently.
Abneesh, morning. Tamanna here. Since you were talking about Asian Paints in that space, do you expect the competition heating up to have any impact at all? And would it be visible in the next quarter, or would you have to wait about 6 months to see impact, if there is any?
Yeah, we expect most of the impact to be visible in H2 of FY25 because this is a physical distribution. So currently, not all their factories are ready. They are still reaching out in terms of distributors, etc. So Grasim impact will be more in H2. Already, what we are seeing is a lot of the initiatives which Grasim is doing, for example, extra grammage or 5-10% lower pricing than Asian Paint, is something which has been tried earlier by the other newcomers. It has been tried out earlier. Does it really work too much? We don't see that working too much. So I think Grasim will be more of a 2-year, 3-year kind of a impact on the sector rather than too much in FY25. Of course, there will be some market share loss whenever such a large player comes. There will be some market share loss for the incumbents, Asian, Berger initially. But long term, we see that number 3, number 4 player, essentially Kansai Exo, will be at a greater risk rather than Asian Paints. So we see Grasim also surviving long term, but definitely it will be more from a 3-year or 2-year time horizon where the impact will be not in FY25, especially in H1, the impact will be limited from
Okay, so clear. So H2 FY25 onwards, you'll see impact, if any, and everyone will survive. There's enough growth over there. But, Abneesh, I just want to come specifically, and I was going through your report, highlights rural slowdown is persisting, urban still leads growth, in that premium category still leads growth. Putting all of those factors together, what would be then your top picks? If you take away the, very temporary election surge that you're going to see on some categories, what would be your top picks, and do you expect this trend to continue of slower rural, higher urban, and more premium focused?
So coming to the last question first, rural slowdown, we expect one more quarter of pain in Q1. After that, it will be more a function of how the monsoon is. This currently forecast is that the monsoon will be even better than the normal, which I think will be very important because last 1 or 2 years, there has been either shortfall or floods too much. So we need to see quality of rainfall and how much is the versus normal. So I would say that if that is normal and too much floods doesn't happen, I would say that the rural recovery should start from Q2. Already we are seeing some signs of that, but from Q2 it should accelerate. Coming to topics, currently we'll have Pidilite, United Breweries. In the staples, we have Nestle, Godrej Consumer, Dabur, and Tata Consumer. These are the 3-4 names in staples. In the discretionary, we like Pidilite and United Breweries.
Right. Thank you for that, Abneesh. Those are a few picks coming in. The Pidilite is one of the few stocks that Abneesh likes. He doesn't think that the current concerns for the FMCG sector are here to stay. Well, in the meantime, the markets have made